don't need to show your income to qualify for a $700,000 investment property. With the right DSCR loan, non-QM investment loan, the property qualifies for the loan, not you. If you're waiting to have the perfect tax returns or the perfect W-2 job, you could be missing out on hundreds of thousands in passive income. I'm Andrew Russell, owner and founder of RCG Mortgage, and I specialize in working with real estate investors to purchase and refinance their investment portfolio and to expedite their path to real estate riches. So I have this client, we'll call him Jason, and Jason actually was struggling to qualify to purchase more investment properties. He's a seasoned investor, made a ton of money, had his own self-employed business, but still showed a ton of money, and it just wasn't happening for him on a pre-approval side to buy another investment property. So he actually saw me, believe it or not, on social media. He saw some of our content based around investment purchases and DSCR. He reached out, and the team did an amazing job in the pre-approval with Jason. And of course, we went over like, look, your tax returns, just whatever you're showing from an income perspective and doing a conventional mortgage, it's just not going to be the right fit for you. Let's talk about a DSCR loan. He gave us the example of what he was looking to purchase. It was a $700,000 triplex or three-family with tons of market rent. So we went over a scenario with him where he put down 20%. The market rent was high. It was several $1,000s, more than enough to cover the mortgage. And not only did we show that he qualified for that mortgage, we actually positioned him for future purchases for more investment properties. So he was able to go out there and get himself a great deal, not be concerned if he was actually qualified or get a pre-approval for it, which is super cool. But I hear you guys saying right now, like, clearly, Andrew, there's some kind of catch here. How is it this simple? Again, just remember, a DSCR mortgage, it's not for a first-time buyer typically. You have to be, in the case of Jason, was a seasoned investor. And if you are a seasoned investor with 20% down typically or more, you qualify based on the market rent. And of course, all the haters saying, Andrew, the rate, it's got to be so much higher, right? What's the catch? It's actually not. These programs, of course, it's market driven, but for whatever reason, in the secondary market, mortgage-backed securities, all that good stuff, the mortgages themselves, the performance is very good, meaning clients who are getting these type of mortgages like a Jason are actually paying them and paying them on time. And in the secondary market, when these mortgages pay on time, investors love them and offer great pricing, which gets passed down to the consumer, which is, of course, Jason. And of course, Andrew, this is clearly a mortgage for pros. All those people I see on socials that have the hundreds of thousands of followers and do this all the time. No, this mortgage, folks, is for you. If you own a property and you want to become an investor, it's something that we can plan into, of course, but this is the exact mortgage that everyone should be using, not just the Jasons. So let's do this. Let's hop over to my computer, guys, through my eyes, under the hood. I want to show you Jason's exact scenario. Slow down and really articulate all the nuances of a DSCR loan for a $700,000 purchase with 20% down. How did Jason qualify? Why didn't he qualify for the other one? What makes it so simple? Let's head over to the computer. All right, guys, check it out. We got Jason DSCR behind my eyes under the hood for his non-QM DSCR purchase. We're going to show you all the goodies here, debunk all the myths, talk about rates, differentials. Was he a pro? Do you have to be a pro? Super excited to show this to you guys. So you have Jason DSCR. That is a fake email. Do not email Jason DSCR. He will not answer, unfortunately, and that's that. So if we look at the property, if you remember, guys, it is $700,000 sale price. It was a triplex. What does a triplex mean? That's a three-family, a three-unit, right? So you think, how many units legally is the property? 1, 2, 3, or 4. This one was a 3-unit, so there were 3 rentable units. He was putting down, in the perfect world for Jason, DSCR, 20%. Mortgage type, let's change it to a non-QM. It's what your boy specializes in. All right, so homeowners insurance was about $300 a month. Obviously a little bit more expensive because it's an investment property and it's also a $700,000 property. Now, this was in an urban area, so taxes weren't as high as the suburbs, so it was about $833 a month for property taxes. So at this point, it makes sense to price it out. So we had a 740 score, which is a great credit score. But if we go into Loan Sifter, again, guys, Loan Sifter, this is where mortgage broker extraordinaires go to price and shop around for the client, for Jason. So we put in expanded guidelines, which means non-QM for us in this capacity. $700,000 sale price. Let's assume it appraises for $700,000, which we would find out once he's in contract and once we get an appraisal. But assuming that that's what the appraised value is, he wanted to put 20% down or 80% financing. This is where we put the 740 credit score. Of course, it is an investment property. This is a super important section over here. It's going to be updated to a 3 unit. Let's use where Brooklyn at. Where Brooklyn at? That's Kings County. That's where Brooklyn is. We are going to, again, from a prepayment penalty perspective, just remember, so DSCR mortgages, guys, they have a prepayment penalty. Now, it's not something crazy, nothing that's, all too exotic. It just means if this mortgage gets paid off, after a day, after a month, after 6 months, after a year, there's no penalty. And it's just a financial penalty. So why would someone opt for a 1, 2, 3, 4, 5-year prepayment penalty? Because the rate and or closing cost, the pricing is actually better. If you tell the company you're working with, hey, I'll do a 5-year prepayment penalty. Let's take a peek. Let's look at a 5-year versus none. Typically we'll price this scenario off of a 3-year, but let's look at all the differences right now. And of course, we're going to change this to a DSCR. And let's assume at least a 1-to-1 ratio, which means will the mortgage payment be covered by all the market rent from a 1-to-1 perspective? Meaning, if the mortgage payment's, for instance, $5,000, if you add the 3 units of rent all together, will it be $5,000 or more? So let's start at the 5-year. Let's submit and see where pricing lands. All right, so somewhere around 7,375 on a 30-year fix. That's where it lands. But let's take a look. If we downgraded this to no prepayment penalty, meaning that Jason could pay this off whenever he wanted if the market got better, the 5-year would have a small penalty. So in other words, there'd probably be some thousands of dollars built into the mortgage payoff when he paid it off because of the prepayment penalty, which is purely financial. If he did no prepayment penalty, 7,375, it actually goes up to 7.5. It's not all that much different, but just understand all the rest of the lenders, they're a lot worse. So sometimes it's, again, the power of the mortgage broker company is that we can use lenders who actually have great pricing, and we have access to all of them, and we're not just stuck at one bank. Typically, you would see a lot worse pricing. So let's just meet in the middle. Let's do a 3-year, which is what clients typically opt for. And the rate would be somewhere around 7% with our best price lender. So it's funny, the 3-year actually priced better than the 5 because some lenders don't even offer a 5-year. So let's just work off a rate of 7%. And that's what we got. So a note rate of 7%, a 30-year fixed rate. The mortgage payment, guys, is going to be about $4,800 and change. What is that comprised of? Of course, you have the mortgage, $3,725. That's the principal and interest. That's what you are actually paying the mortgage company. Now, if you're escrowing, including your $300 in insurance and your $800 in taxes, the all-in payment is $4,858. So if we did this, what would the market rent be to cover? So now each unit was about $2,500 in rent, which is very reasonable. So if we put in 2,500 times 3, if you really want me to do this on a calculator, just for you guys, I'll do it. 2,500 a unit times 3, 7,500 in market rent. So 7,500 here, right? Does that cover 4,800? It absolutely does. It's actually a lot higher. So this divided by 4,858, what's the ratio? It's a 1.5 and change. What does that mean? If we go back to pricing, if you remember, guys, if you love this techie stuff, that the market rent is 150% more than the payment, which is awesome. And what does that mean? He might actually get better pricing. So let's see, if we raise the coverage and he's getting a great deal, does 7%? It stays the same. So in this case, this lender doesn't seem to, our best price lending doesn't change the pricing, but sometimes it does. The other lenders actually it increased, but this one's the outlier. This one's pricing best. That's the one that we would use, obviously, for our boy, Jason. So this is what we got. This is what it would take to qualify, and this is why it was easy for him all day long. Now, of course, I hear you saying, now, hey, Andrew, 7%. What would it be if you did a conventional loan? So if we change this to, say he qualified for a conventional. If we change it to a conventional purchase, there's no prepayment allowed on conventional. So there you go, 740 investment, 3 family. If we submitted 20% down, I know the answer doesn't work. Why? Conventional loans actually require 25% down, number one, for a investment 3-family purchase. So number one, doesn't even work out of the gate. Even if they showed $1 billion a month in income, just straight up doesn't work. So 20% down, the non-QM, the DSCR mortgage is really going to be what's viable anyway. Now, let's just say he did, for argument's sake, put 25% down. I want to show you the rate differential, current market snapshot versus a DSCR 20% down. So here you go, it's 675, and that's with 25% down. So just as a goof, let's change this to a DSCR again, 3-year prepay, back to a DSCR. if you wanted to put 25% down and the coverage is only a 1-to-1, what would that pricing be? Because remember, it's a 675. What is it as a DSCR? It's only an eighth higher. So I wanted to prove the point to you guys. Two things here. Number one, he actually easily qualified for 20% down based on the market rent on a DSCR purchase. But even if he did qualify for a conventional, the rate is not all that much higher, if at all, for this program, number one. And number two, the fact of the matter is that conventional mortgage guidelines are more restrictive with the down payment. So there is no such thing as a 20% down, 3-family investment conventional purchase. So that shows you why this is the best option for Jason specifically for this purchase. And I hear what you're saying, guys. You got to be a pro to get this. Clearly, Jason, I mean, the guy's name is Jason DSCR, right? Of course, the guy's going to be a pro. You don't. Whether you're a pro, you have an investment property, you own a primary, you're a first-time investor, but you actually own a primary, so there's no concern of you potentially moving in, which is naughty. Remember, guys, if you say you're going to move into something, you have to. If you say you're not going to like an investment and you move in, very bad. These are things that are definitely, big black eye in the industry in general, and you as a consumer, it's something you cannot do. It's actually very, very bad. I always use that as the disclaimer. But if you own a property and you want to get into the investment, rental, DSCR space, this is what it is. Whether you're Jason or Andrew or Steven or Greg or Elizabeth, if you have a certain credit score, which we've kind of gone over, if you can put the money down, this is the exact way to qualify. No matter who you are, you don't have to be a pro. You just have to work with a professional mortgage company, of course. So let's take a peek in this scenario. So as an example, if you say, oh, you have to be a seasoned investor. So here it is, $700,000. Let's go back to 20% down. Let's have your 740 score, investment property, 3-family with your 3-year prepay, right? So let's see, you say you have to be a pro. So you don't. We just went over what it takes to qualify. But what if your score isn't as good? What if it's a 680, right? Is it doable? I don't know. Let's click submit, see what happens, guys. So that 687, so now you're going up to 7875. So just remember, with 20% down, we were around 7%. So the rate does go up. So the only difference, it's not about being a pro. Your credit score has to be pro level, of course. But at a 680 with 20% down, you still can get the job done with a DSCR loan. What about a 660, which is starting to get a little bit lower, guys? Let's see, 660 score, DSCR, it prices up. But there you go, up to 8375. So again, you don't have to be a pro, but it's off of your score. So the 740 to a 680 to a 660 plays a big difference in the interest rate. 8375 it starts going up to. So obviously you see it's getting raised. Now I'm just curious. I do this for a living, right? A 640 score, is this doable? Spider Sense, I'm thinking no. Ooh, it is. But look at this pricing. Only a couple lenders offer it, and it's just horrific pricing. So really, just to keep it simple, at least in the current market, a 660 score gets the job done. That's really what you're working with, which means, again, a 660 score, you don't have to be a pro. There's always room to improve your credit score, guys, but I've just given you the clearest illustration that even with a 660 score, and even with the rate going up to 7875, let's take a look, 7875, 20% down, the payment goes up about $5,200, but this is the point. It's $7,500 a month and $5,100, so it's cash flowing over $2,000 a month. So it shows you, not only do you not have to be a pro, even with a 660, 680 score, you can get yourself a great deal. So guys, check it out. I know it's a lot of stuff we throw at you with these videos. Go in my description, click the link, click on the DSCR loan guide, the GOAT of investing, the greatest of all time, baby. Make sure you click the link, get the guide. It'll break this down so at your own time, at your convenience, you can go over these type of mortgages, DSCR mortgages. Is it the right loan for you? And it gives you a clear, easy, understandable guide just to go over it. Make sure you go in the description and click the link, guys.
If you're self-employed and looking to buy your dream home to move into and not just an investment property, make sure you check out my next video, guys. How to buy $1 million home with just your bank statements and no tax returns. It's going to show you exactly how to buy an amazing dream home for you if you're self-employed, just going off of your bank statements and your revenue with no tax returns needed.